right before 9. So welcome back. This one's called The Good, the Bad, and the Ugly. And of course, I'm referring to the Fed, Putin, or Putin, whatever you want to call him, and inflation. But I mean, if you don't remember the good, the bad, and the ugly, I've got to take a minute just to show you, maybe 30 seconds, to show you what I grew up with here. And it's a scene. There's the good, the bad. No, there's the ugly. You got to remember this scene, right? At the very end, the most popular scene ever. That's the good, the bad, and the ugly. Hope you remember that one. Now, let's start off with a quote here from Elon Musk. Check out what he says. He says, let me read it to you. The CEO says, I think the official numbers actually understate the true magnitude of inflation. This is Elon Musk a few days ago. And inflation appears to be likely to continue for at least the remainder of this year, right? That's all of 2022. We're in April. In some cases, Musk said Tesla suppliers are requesting 20 to 30% cost increase for parts from 2021 to 2022. The important thing on that is to note that someone like Elon, not just Elon, a whole bunch of other CEOs are saying inflation is going to continue throughout the year. And the Fed has already said, look, interest rates, they're going to continue to go up this year. And if you watched yesterday's video, I showed you in May 2nd, May 3rd, when they meet, interest rates are going to go up. Now, what does this have to do with real estate, though? And here's the part where I have to start with inflation and explain to you with inflation, as it keeps on going up, the only way to try to beat it from the US's experience and the world's experience is to raise rates. Now, I'm going to show you something really quick. One article I want to read to you. This one will explain it to you a little bit better. So, what influences mortgage rates? And I think sometimes we get confused as to what really happens. Some people think that as the rates are risen uh, by the Fed, somehow the rates automatically have to go up for mortgage. And that's not the case. So let me read this to you. When mortgage lenders have too much business, they raise rates to decrease demand. Obviously, normal, right? When business is light, they tend to cut rates to attract more customers. Price inflation, read that. Inflation pushes on rates as well. When inflation is low, rates trend lower. When inflation picks up, so do fixed mortgage rates. So that's what's happening right now. And of course, the low rates have been around because we've had a lot of borrowing and a lot of spending. So what happens when you add on top of that, wages have gone up over the last few years. And I mean, look at where oil is. And who can you blame for oil going up so high? There's also another part as I was digging in, right? Besides, look what this Wall Street Journal article said 2 days ago. It said the governments often finance war by printing money or keeping interests too low. So whether the immediate burst of inflation precipitated by Russian attacks persists depends crucially on whether the Federal Reserve and other banks have means and inclinations to push inflation back down. Well, we're trying, right? That's the Fed. That's the good. In the good, the bad, and the ugly, I'm saying the Fed is the good one. But check this out. Things get a little bit worse. According to Mikola Volkivsky, former advisor, he says today Europe and the world are facing a sharp rise in food and energy prices, and things will get worse, right? Because it's going to hit the consumer. You know why? Because we've been globalized. And now when something hits maybe an area that didn't used to affect us, like Ukraine, now it does. Here's one thing that this is the part that I discovered, and I didn't even know this. So check this out, the price of oil. This is why you're seeing oil prices go up. These two little highlighted areas. The quantity of oil that US imports has little to no effect on the prices we pay for crude oil. Right? This is Kaufman. And I'll put up the link to these. And if you have any comments, by the way, throw them in there. There is one global market for crude oil. That global price sets the price for all crude oils, plus or minus a couple of dollars, depending on transportation costs. That's nuts because look, suppose the US was self-sufficient in oil and the oil was selling at $70 a barrel, right, as it was before Russia invaded Ukraine. The invasion raises the price for crude oil on a global market to 110. You see how now This is why we're all being affected on the oil side, just in case you didn't know. Now we're going back to the Fed, and I showed this yesterday. They're going to meet on May 3rd and May 4th and saying, well, let's raise the rate, which in essence is going to cause the investors to be like, oh, well, you know what? We need to raise the mortgage rates as well. And I'll put this article. It's really good as well because it'll show you what's happening in the interest rate world now. This was my favorite because this guy, Paul Krugman, New York Times, he said this: higher rates will operate largely by hitting the housing market. Duh. Like, we've been saying this from the very beginning. And over the long term, one big problem, right? Over the longer term, one big problem with America is that we aren't building enough housing. You see that? This guy's brilliant, whoever this guy is. Like, I need to be friends with Paul Krugman. This is smart. Look what he goes on to say, because I highlighted another area. The Fed doesn't directly determine mortgage rates, right? I just told you that. Banks deciding how much to charge for loans pay a lot of attention to what they think the Fed will do in the future. And what did I say? They're going to continue to raise the rates, right? If they expect short-term rates to go up, they'll start charging more for home loans right away because they don't want to tie up their money since they'll be able to get more later. So what this guy's practically saying, he's saying, you know what? It's going to affect us a lot more than you think in the interest rate world with the housing. It's going to slow down purchases because it's going to take out those buyers. All of a sudden, in a lot of markets, we're going to start seeing less and less buyers. It doesn't mean we're going into a crash, though. This is why I keep on doing these videos. I need you to understand it's kind of like a slower landing. In some areas, like Miami, like Phoenix, we're still going to see multiple offers. In parts of California and other parts, we're still seeing that. That won't affect it that much. Now, depending on where the interest rate goes up, right? Because right now was around 6%. And if your FICO scores is around 720 or so, that's where it is. If it's lower, the interest rate is higher. So it looks like we'll probably end up somewhere in the mid sevens as the rates keep on going. If it goes much higher than that, I don't know what'll happen. This is why I'm also giving these videos on a daily basis. So just watch out. The good, the bad, and the ugly. A lot of this is going to rely on these three things. Inflation, that's the ugly, right? The war, that's the bad, Putin. And then the good is the Fed. I know a lot of people are like, the Fed, how can they be good? Well, look, there may be another way to curb inflation, but that's the way they're going right now. They're going to continue to raise the rates to curb inflation. Let's see how this goes. I want to know what your comments are. Put them in the chat, put them on YouTube, subscribe to my channel, and let me know what you think, because as I'm doing this, I'm learning too. And I learn a lot from the comments, and so do other people. So get on to it, subscribe, comment, and I'll see you tomorrow.